Hello everyone, happy Sunday. According to July's seasonality chart, the S&P 500 was supposed to be green. So in today's video, we're going to take a look at what August's seasonality chart is going to be, what the next steps are for the market. We're going to take a look at the S&P 500, the NASDAQ, the Russell, the dollar, the bonds. We're going to put it all together. We're going to take a look at what levels need to cross, what needs to hold, and we're going to put it all together. All right, so without further ado, let's get started with the video. All right, so let's start off by looking at July's seasonality chart. All right, so we can see here, let me make sure the mic is working. Perfect. So we can see here that July was supposed to be a very green month. Clearly, according to this chart, July is the second best performing month over the past 20 years on the SPX. And it had an average of 2.2% gain. And clearly, the S&P 500 was up over 2.2%. For the month. You can see that this month it's up over 3%. Okay, so clearly, seasonality works. All right, heading into August, what is August's seasonality like? So over the past 20 years, you can see here, August is historically a flat month. So, yeah, there's not really much to look at here. August, it's flat. 60% of the time, it's flat. And that sucks in terms of like big moves. All right, so there's that. And yeah, we could hope. Let's just hope that we get some volatility and some big movement during this month. Next, we have to take a look at earnings for this week. And my head has to go somewhere else here. So number one, this week is going to be huge. All right, so starting off Monday, we got SoFi, garbage. Tuesday, we have Uber. And then after the close, we have AMD. So AMD is obviously a chip. Chip stocks are going to be heavily infected based off of AMD's earning, which means Nvidia is also going to be affected. Then Wednesday, we have PayPal, Shopify, CVS, Humana, more economically sensitive IWM related stocks reporting earnings all throughout the week this week. And then Thursday, we've got Amazon, Apple, reporting earnings. Of course, Coinbase as well, but Amazon and Apple are going to be very, very big. So once again, what do we know so far? We know that Apple is starting to incorporate AI. They hinted at AI. They hinted at basically entering the AI space. Amazon has yet to really incorporate it very, very heavily in terms of a product. So it could be really interesting to see what Amazon does. And very, very interested to see. Of course, heading into Thursday, there could be an earnings run-up where tech stocks do well heading into this date. So, yeah, it's going to be very, very fun to see what happens. So just be careful, especially heading into a Wednesday night and Thursday into the close. Tech stocks can do very, very well. All right, so this week should be pretty fun in terms of economic data. Monday, tomorrow is going to be very, very dry. Should be a fun day to trade. Tuesday morning, 10 a.m., we have some news, manufacturing PMI. Wednesday morning, pre-market, we have news. Thursday night. So basically, we have Apple and Amazon earnings after hours on Thursday. And then Friday morning, pre-market, we have a lot of news. So Thursday into Friday morning is going to be really, really jam-packed. So keep your eyes out on that. To make this very, very simple, looking at the S&P right now, clearly, you can see that we're trading in a range. All right, nice and simple. Something like this, 460, 461 area, 462, this very, very major level of resistance here, would be the upside target. Once we get here, people are going to be offloading their longs. And from here, that's when shorting is going to be the best case scenario. So 463, 464 is like an amazing opportunity, in my opinion, to start to really, really, really go short on the market. And right now, what's going on, right? Just zooming out, what is going on in the market right now is if they set this up for another leg up, everyone and their moms are going to become very, very bullish. And it is not the time to be bullish at that point. So especially when we gapped up Thursday, was not the time to go long. That's why we shorted and we got 458 puts. If we gap up again and if we really start to show some strength above 463, 464, the only thing that I can think of that will cause the markets to sustainably move up there is if Apple, Amazon, and the large tech stocks and everything start to show a lot of strength. And I don't know if that's going to happen. So what we need to see, right, immediately, the two most important things that we need to look for are the dollar and the bonds. Okay, so the reason why the dollar is important is because the dollar has an inverse relationship to the market. If the dollar is showing strength, that means that the market should be falling. Okay, so right now we can clearly see we've been monitoring this MACD indicator on the dollar. It's showing this slow acting MACD line. Very, very simply, guys, this slow acting MACD line is doing what it needs to do. It's moving upwards. The blue faster acting MACD line is very overextended to the upside, very overbought, and it's doing what it needs to do to shift the momentum to the upside. So the dollar is doing what it needs to do, but it needs to hold this level of support here at 101.33. And if it can do that, then it can really, really continue to move upwards. But this is the most important close level of support on the dollar. And if it can hold that, then we're going to continue moving up. And if we continue moving up on the dollar, then the stock market should be falling. Okay, so that's number one. Number two, we have to take a look at the bonds. Okay, and the bonds are very, very important because the bonds have a more correlated relationship to the market. If the bonds are showing extreme weakness, then the overall stock market is also going to be showing extreme weakness. So right now we saw a clear-cut big move to the downside on the bonds, and we are now at a level of support. This is not the time to go short on the bonds. But ideally, if you were trading the bonds, you would want it to retest a level of resistance and go short there. But this move on the bonds is by no means bullish. Just the issue is that we're at a level of support and going short here. Once again, as we saw on the indices, looking at the S&P on the daily chart, right? Like as we saw over here, when you try to go short right here at a level of support, you get rocked. Okay, so you can't be doing that. Very simply, especially when the market is ranging and chopping around, keep it very, very simple. You go long at support and you go short at resistance. So similar situation on the bonds. The bonds are just not showing strength. What we need to see is the bonds break below levels of support. So if the bonds break below these prior levels of support here and start to really show weakness below the levels of support, that is when I think the weakness in the bonds are going to start showing and permeating in the overall market, in the S&P. For now, it's not really the case. And yeah, so for now, the dollar is in a weird state. It's showing upward momentum. The bonds are in a weird state as well, but they're showing downward momentum. And the overall market can genuinely continue to rise, especially with tech stocks reporting earnings Thursday. So there's a lot that could still happen. The main levels, first of all, one of the first things that we need to watch is Apple's piece of crap maintaining this uptrend. So it's continuing to maintain this uptrend. And the level for tomorrow for this uptrend to continue is 194.73. So we saw on Thursday it closed below the uptrend and then it gapped up. So we need to watch for 194.73. And if it can close above 194.73, then it could continue up. Okay. If it closes below that, then we can start to show some weakness in Apple. But so far, that is going to be the level. If Apple continues to show strength, then it's, I would like to see Apple show a lot of strength heading into earnings and then just fall very, very hard, fall down afterward. That would be great. And that would lead to like a lot of selling in the overall market. So that's what I'm hoping for. But let's see. But yeah, so basically we need to remain above 452. and there's resistance. It needs to remain above 452 to remain bullish, and 463, 464 area, that is when a lot of people should become very, very bearish, in my opinion, on the market. And the only reason why the market would just not get any sort of move to the downside is dependent on earnings. So if Apple and AMD and these other large stocks report very, very good earnings, and if the tech stocks can keep the market up, then this is just going to continue rising, and it's going to be a sight to watch. But yeah, we just have to continue monitoring the dollar, the bonds, the NASDAQ. Obviously, it's just, it has to just do what it continues doing, and then the Russell, it's still ranging as well. So really, all eyes are going to be on the S&P, the dollar, and the bonds. All right. So I hope you guys enjoyed today's video. That is what you need to basically look for at levels of support. You should not be going short. You should be buying with a stop loss a bit below support, and that's currently what the market is doing. And yeah, all right. So I hope you guys have a good night. I hope you guys have an even better Monday morning, and you guys have an amazing week in your trading. All right. So without further ado, I hope you guys enjoy. Make sure to like, comment, subscribe, do all that good stuff, and I will see you guys bright and early tomorrow morning. Thank you.